following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday and market days. And I'm showing you a chart here of the Dow. You remember the 120-minute chart? I showed you the one-to-one expansion, showed you Elliott wave with a Chapman wave trough F at 5, and we're running up to leg 5 right now in the 120-minute chart. All we need is another 30, 40 points. And we made an all-time high in the Dow. That's what we've been expecting, leg D. And there it is. Peak C at 18,622. Leg D starts at 18,623. What do we look for in the Chapman wave methodology? 4 higher peaks. So let's get to the nitty-gritties. Thank you, everyone, for great opening segments right from 8 o'clock this morning with John Logan. Of course, you got shows all the way through today. I do not want to forget, we've had webinars going on in August, and we had, on Monday night you had one with Nico and Paige, and fabulous. And you've got, tomorrow night, you've got Steve Rhodes. Tonight you've got Andy Hecht going on. And next week I'm hoping to have one. It's going to be a very exciting month because all of us have got a lot of experience and a lot of expertise in certain areas. Putting it together is the composite that we offer here at TFNN. Take advantage of it. What am I looking for? The E-mini, let me show you the 10-minute chart right now. E-mini is in leg C up. Folks who saw me go online just a few minutes ago saw it was peak B, saw that I'd already drawn the cup formation, the left side, right side price time match with the Chapman wave inside wedge target area. We just got there 1 bar early than the 10-minute bar of 11:30. We got there in this bar of 11:10 and 11:10:20. What happened to 11:20? Oh, it's right there. Oh, 2 bars early. I'm sorry. 2 bars early when you think that we started the whole process at 4:40, 10 to 5 on the 8th. We made this beautiful cup formation with an H pattern, successful H pattern. Zip, gone to leg C. Expect another leg D. And this is very exciting. We are long from our opening call subscribers. We're along the Dow and long from what was it last Wednesday, I think, at the positive early weakness and then the positive turn when the Dow was plus 12. So we're still holding the long position. Now, this is going to be really interesting. This is what I discussed with my subscribers this morning. Well, for the last, since the weekend. What happens when we make that new leg in the Dow? Well, I'm suspecting that we are. We might not, but I suspect we will make it this week, if not today, tomorrow. And if we do, what happens? This is very complex. So let me run all the numbers. The Dow is up 52 at 18,581. The S&P is up 6 at 2187. The comp index is up 21 at 5234. The VIX index is down in the 11 area, 1105, down 45 cents. You've got, and this is going to be very interesting. So in the Chapman wave methodology, in the E-mini, you've got a brand new break of the 2183 round number high at peak E. So this starts a new leg. Either this is going to be and this could be an F slash what? Slash what? Slash. Is that a B? 7675, 7675. Ah, there it is. No. Oh, this is still leg A? No way. Yep, this is a brand new F slash A. Very exciting. So what we're looking at here, that is the E-mini 10-minute chart and then the 120-minute chart. And now I can even show you something that's very interesting. This is the 2-minute chart. And the 2-minute chart says we've gone A. This is E slash B. I think it's a B, and it's going to go to a C and a D. Very exciting. So the support levels in the E-mini right now, 2178. If it breaks that, it could take a little bit of a digestive phase before it tries for the next rally. It's like a stair-step move all day today. And on the upside, once we're out and we're through the 2185s, then all you've got to do is to see a move towards the, we've made it already. 83.25. We're there. So now I have to look at the Dow. So let me finish the numbers. Gold is up 5.5 at 13.46. Silver's up 6 cents at 19.86. High-grade copper is down 2.16. This is something very interesting that's going on. I don't know if I want to talk about it now. Let's just move on. Crude oil is at 42.99, down just a fraction. And you've got bonds. Wait a minute. Crude oil. USO was up earlier on. USO, yeah, giving it back. USO, United States crude, is up 5 cents at 10.15. United States Oil Fund, it should be called. And you've got bonds up 24.30 seconds. I have to tell you, this is the most fascinating period I can ever recall. The Japanization of our bond yields just continues. Every correction is just a very small correction. I think something's about to change, and I'll explain it as we move along. My subscribers know what we're looking for at this particular point, and we're going to try to deal with that. Now, I had a quick question. Would I look at the TLT? Yes, the TLT is there. And would I look at the TBT? Well, there's an inverse relationship. The one is short, the one is long. The TBT is short, and in fact, we took a bit of a profit the other day. We were short from 30.56, took some profit, and I don't know yet whether we want to go back in, because I think that this is a pattern that's suggesting it wants to test the lows in the 30 area, 30.20 area. But if it breaks in the next 2 days, and this is going to be a very important 2 days, if the TBT, that's the Lehman ultra short Lehman 20-year Treasury fund, if that actually spikes towards the 32.20s, up $1 from here, that's going to be a change, and that's going to mean that I'm going to start looking very closely at the yield chart. I'm not going to do it right now, but I do want to move on, and I want to move on to the dollar, because the dollar is at 96.19. It's down 21 cents. The dollar's actually been struggling. It should have moved to the 96.74, 96.82 level. It just stalled. It couldn't do it. And that's telling me that if I look at gold, gold is acting as if it's stuck in a range, and it's holding the 9-period moving average of the weekly chart, and at 13.47 up 6. If at any point it takes out the lows of the past couple of weeks, if it goes under 13, let's call it 18, but let's call it 13.15, not a big deal for gold. If it does take that out, it says be careful, because it could pull back more and start to make lower lows and lower highs, even though it's just really a big consolidation with 1300 to 1282 as tremendous support. If, on the other hand, and this is a really critical week that we're looking at, if, on the other hand, gold rallies over 1368, 1372 resistance and can start to make its way above 1374.5, that will make leg D. It'll be an inside buy mode underneath the previous high, and until gold actually smacks into the 1389-ish area, 1390s, it's going to say this consolidation could continue a while long, just as bonds. We could be in a very narrow historical but wide short-term trading band between the gold and the dollar and bonds. I'm going to go to Scott in Safety Harbor. Scott, how are you? Hi, Scott. Scott there? I'm sure he's there. All right, we've got a break coming up, folks. The Dow's up 55, S&P's up 6.5. Basil Chapman will be back straight after this break, and we'll go to Scott in Safety Harbor if he's there, which I believe he is.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. I had a question about the German funds, but I want to see, is Scott there? Scott, you there?
Basil, I'm here. Yes, Basil, I'm here. This morning I woke up and here's the VXX up 300%, and I just got so giddy. But the other side of me was, this cannot be true, And
$10
to $36, and I'm like, like I said, half of me, the skeptic, was like, can't be true. The other half's like, man, let's party.
Yeah. Let's start booking our trip to whatever
they
it is.
did the split. Now here's.
Scott, hold it. Scott, let me explain. Folks, there was a split, and the split was supposed to be with the VXX and the TWIX, which is what we often trade if we want to go short the market via the volatility index, having a long position in the volatility index, 2 times long. That was down at 0.92. I was going to say yesterday, let's buy it at 0.92. And then I thought, wait a minute, 0.92, and I'm still waiting for leg D in the Dow. It's just, I can't do that. I'd love to do it. I know that I've got to tell people to refrain from overdoing it. Just because it's under $1 doesn't mean you go out and buy 10,000 of the little things. And they had said, I checked it out, and they had said that the TVIX instrument would be reverse split in September. And I thought, geez, by September it'll be worth like 5 cents. What are they thinking? Well, it turns out that both the VXX and the TVIX have been split, and therefore you're looking at the VXX, which is the iPath S&P 500 VIX short-term trading vehicle, trading at $35.95, down $1.26, down 3.37%, which is how you get your 337%. Correct?
That's correct, Basil. But you know what makes me angry is, I'm sitting in 10,000 shares of that at $9.60, and I did not know this was going to happen. Now you'll say, well, why are you upset? Because here's why. Because when I talked to a couple other traders I know today, I said, well, what do you got? You guys going to still trade it? Well, here's your philosophy, a lot of these people. they peek at things every day. You have your favorite list, right? And you
Correct.
peek at that favorite list and see what they're at. And this is
Correct.
quoting one of the guys said, now when I peek over at it, I don't it doesn't mean anything to me, that $36, because I haven't, done a colonoscopy on it. I don't know
Correct.
the stock anymore. I said, are you going to trade it anymore? Nah, I probably won't. Now, that's just one person. I know there's a lot of other people. It's going to take a long time for people to get to know that stock again.
Scott, let me just say one little thing here. It's so funny that you said it, because on my Traders Corner, that's my daily where I have my 18, 19 bullet points every single day. It's not my opening call newsletter. This is the very final thing of the newsletter. It's where I have what I call the Traders Corner, and I have the Dow Diamonds. I have I might have the inverse of the Dow. We are long the UDO, so UDOW, that's 300% long the Dow. So I've got what our trading position is. I've got something that we would go short if it hits a certain level. I always have the Qs, even though we don't often trade the QQQs. I have a commodity index, which is doing quite nicely. We just got again. I've got GE. We don't always trade GE, but I use it as an indicator. I have GLD. We don't trade GLD very often. I have it every day. I have these things. Well, what is interesting, when I got down to the TVIX, where I put it in every day, I had TVIX. I have two TVIX 10-to-1 reverse split waiting. And all I can say is that I understand exactly what those folks are talking about, because for me, it didn't have the same appeal in the sense that it was going to be a very inexpensive insurance. Why? Because even though at 21.48 down $1.64 today, it's still it's exactly the same thing. It's just the price has changed, but there's nothing. The chart patterns, no difference. Nothing's different other than they made it a reverse split. So in other words, you've got the same piece of cake, except this time it's cut into different pieces, or it's put together. Let's put it that way. But my thinking here is, now it's actually going to be much easier for us to trade this vehicle, because I can have the parameters. For some reason, the bigger the price, it's easier to think in terms of percentage terms. Whereas if you've got something trading at 0.93, you could have a 5-cent stop. A 5-cent stop is already almost over 5%. So you don't have to go as big in the stop. I don't believe that you're going to have to. So the thinking changes, but nothing about the mechanics change. So I'm just explaining that even I had looked at it and I said, it doesn't quite have the same appeal to me, because a nibble at 0.93 is very different to a nibble at 21.48. That's all, but it shouldn't change anything.
Well, as far as the retail trader goes, this is a fact I'm about to tell you. I was with a group that was 10 of us that were traders, and this is going back about 4 or 5 years, and right up until about 2 years ago. Then I just don't have time to deal with everybody. But anyway, we all used to trade Citibank. After Citibank did a similar thing, not one single of those guys traded Citibank again, including me.
It's just, I know it's a psychological thing. It shouldn't be there, and I've got rid of it. I cheat it now. I've gone through all that a long time ago. It doesn't bother me. I still treat these things as vehicles to be traded.
Now, conversely, if you remember way back when Apple made their trade, I put out a call on it that said buy Apple, because Apple's going to start to be traded more now that it's cheaper, and it will go up. And it did just exactly that.
Exactly right. So now today, let's see. What are we looking at?
The genius about today is POT. That's in the oven. I don't even want to look at it now for a couple months, but let's look at POT.
So POT, folks, is potash. And you remember last week we had a call from, so in this particular instance, POT, let me tell you, is potash. It's got potash and other minerals, and it's trading at 16.45. It's up 6 cents. And Scott had called before, and I said I wasn't quite sure about it. It looks like it's in a trading range, but if you can get the bottom of the range, you can try to trade it to the top of the range. And it is making lower lows and lower highs, and it's up a little bit today. I don't think I've changed my thinking, but what I am going to say is that there is a possibility, and I can only put it into the category of a possibility, that the monthly chart, if potash can hold above, I would not like it to see it break under 15.30. So that's let me even say 1550 to 1560 should be a major cushion. In fact, it should not even go down there in the next week. If potash can move to the upper side, it'll be the first time in the arch formation in the monthly chart, not the weekly. The weekly's been very choppy, but it's made, it's created a huge base that if the weekly can break above 20 in the next 3 weeks without taking out that 15-ish area, 1550 area, it'll start to improve the monthly to the point where you can get an arch formation, which says you could now go back to the top, and the previous, not the top, I mean the previous top, the top of March would be 19.38. So I haven't changed my opinion that potash is in the category that you can trade it from the bottom, and then you have to start being careful as it moves towards the top part of the range. But I am going to put a trend line in here just to say to you, if you are trading it, watch out, because the 1680s to the 1710 area should be the resistance. That's the big resistance. Hope that helps you, Scott.
I had my finger on the trigger, Basil, of POT at 1580 or the VXX, right. So I should have stayed with what I knew.
Okay. Thank you for calling, Scott. We'll be in touch.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. And let me just do this quickly because I know that we have new listeners all the time. So I think it'll be appropriate to do this if I can find it. There it comes up. I just wanted to show you the basic concept of the Chapman wave. We'll do that every day because people always ask me just, it gets a little complicated if you don't explain it. So here it is, visual. I'm very visual. You see a declining move. When there's an identifiable low bar, you merely count each successively low bar. You want to use alphabets on the downside lowercase, on the upside uppercase, and we're using the alphabet going from A to G. The idea is to go 4 higher peaks: peak A, peak B, peak C, and peak D. That's where other things can happen. Keep it as simple as that. What do I look for? Lowest low bar, merely count each successively higher peaks at peak D. That's where the yellow light flashes. Doesn't mean to say you've got to get nervous or anything. Just says, please be a little careful here because other things can happen. Well, I had some really good questions during the break. I sent some emails saying, here we go, the XRT. The XRT is the Spider S&P retail ETF. It made a peak E. That's the 5th highest peak, not the 4th. Peak D right there. Then it went to an E, and now it's pulling back. The weekly chart is broken out a little bit, but it hasn't sustained the breakout. And in fact, the monthly chart says there's a declining, there's an is it a symmetrical or an asymmetrical? Let me just have a look here. In fact, I'm going to take it from there and just take it from here. Okay, you can call it a symmetrical triangle. That means that the line down and the line up are about the same degree. And they coming to resistance point. The apex would come in at about December if it just kept on making smaller highs and smaller lows, the lower highs and higher lows and lower highs. And in fact, it'll break out. If at 44.47, down 32 cents today, there's a really good spike into the 46s. It needs another 1.5 to 2 points to really break out. Most importantly, the weekly chart says, yeah, the technicals are good, the price is okay, but it's not really responding to positive news in the market. The Dow's up 50, S&P's up 587, and here it is, down 31 cents. Well, if you look at the weekly chart, the daily chart, which is our pilot light, it is our rudder. Actually, the 120-minute chart is closer to being the rudder, but let's call it the daily chart. The daily, excuse me, that was a surprise. The daily chart has, I can draw the lines in the game, made a peak E, and most importantly, I'm going to make it a very conservative one. And I'm going to make it a conservative one on that side as well. The daily chart is saying, hey, I'm just kind of stuck in a whipsaw action like a sine wave going up and down, but around the 9-period moving average, that black line there. And until I can really see a move in the XRT above 45.50, well, there goes that 46 again. If we're into the 46s, this looks like it might be turning down very soon. Well, let's look at some of the components. TGT, this is a question Adam asked. So TGT, a great company, Target Core, made a high back in 2015, I think it was June, at 85.81. And it dropped down to 65s, and now it's at 74.34. Struggling. It's really struggling. Made a peak F in the Chapman wave in the daily chart. The technicals are failing, and all I can say is that it needs very quickly to get from the 72.79 level, down 221 right now, back into the 75s, because if it takes out 70 as key support, it impacts the daily, it impacts the weekly, and in fact, it starts to impact the monthly, because the monthly goes into the Chapman wave inside buy trading band right there, that up channel, and it says, that's where you should be having buying pressure, propellant upside pressure, not downside pressures. Target Core is not acting as well as it should. What was the question? GPS, which is not the GPS that we use in the car, it is the GPS that we look at as Gap Inc. Also made a double top back in 2013 and then 2014 in the 46 area, 46.85-ish area, comes all the way down to the teens, and now it's trading at 25.05, and it's kind of struggling over the last few days, and today especially down $1.51, and it's hitting that 200-period moving average. So GPS down 151 at 24.11. This is an important stock, the Gap, and it is it's not acting poorly yet, but it's not showing the kind of sustained strength to the upside after the fantastic weekly chart since May. It's been going just straight up every week. It's making like a leg A the peak A, and now it's just stalled. So this is going to be very important. It needs 2680 to 2730, needs it within a week and a half without taking out 23. Breaks 23, it's a real problem. So this is very interesting because the RTH, which I follow a lot closer, has made that peak D top, is holding very nicely. The weekly chart is holding very nicely, and the monthly chart is strong. Why? Because the market vectors retail ETF, 80.50 up 7 cents right now, has Walmart, Home Depot, Amazon, CVS, Lowe's, Costco, McKesson, Target, TJX. There's an overlap, but I think this is a better structure. It has AZO, which is that big auto parts company. It has GPS. So this is very interesting, and Ross Stores, and BBY, and Staples. So holding here is really important. And that brings me to something that I wanted to talk about. What leg? I just did the leg. So peak D in the RTH weekly, peak D, but holding very well, almost about to test the top of that at 80.86 is trading at 80.50 right now, very close to making a little E. So this is acting much, much better. I'm going to recommend, Adam, do the two together. Look at your XRT, but also look at the RTH. There's just enough difference in the makeup of them that the RTH for me is the leader. It's the one I always look at because I prefer its makeup. Bob asked about GPBUSD. And at this particular point, I just see that H pattern going to an M pattern. I have to tell you, this is just not a good-looking chart. Trading at 1.300. If it goes into the 129 area, there's a real good chance it'll test the 128 low. Just be real careful. Got a lot of resistance at 1.31. Okay, now I want to do a couple of things because, as I say, next week I will be doing my own webinar. It's going to be a webinar having gone to new highs. I'm expecting one more new high in the Dow, and then we have to be a little bit careful. And it's what are the implications? Remember, I did that last year. I've been doing it for a year. What are the implications of new highs? And thus far, all I can say is I'm anticipating a pretty steep, sudden, bad news event that's going to take the market down fairly within maybe this week, maybe next week. But I think we come back, and I think we go to new highs again, all-time highs. And I don't know whether you can call it a Trump rally or a Clinton rally. I couldn't care less. I just want a rally. And there are a bunch of reasons why. And we're in the coda phase, which says that every pullback, no matter how steep and sharp, should have limited time. It's going to be price this time, not time, if we pull back. And I haven't got the signals yet. I have no idea yet. When it'll come. I shouldn't say I haven't got an idea. I have an idea, but that idea is subject to change because it's dependent on market action within certain sectors. So we've got our break coming up, and I'll be back. The Dow's up 47, S&P's up 5, and two things I want to look at as soon as we get back, and that is the actual VIX itself, the VIX index right here, trading at 11.22, and I do want to look at bonds.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
One of the most unusual chart patterns that I've been looking at is this little conglomeration of price movement here in the EEM, which is trading at 37.25. Remember, I liked it the other day. I still think it's acting very well, and it seems to want to go to 37.89. That's the 200-period moving average in the weekly chart, which it hasn't seen for a very long time, and it's trading at 37.24, up 36 cents. This is E/A in the daily, but I'm going to make a note of this because it's one of those patterns that I don't recall ever seeing before. This quickest peak ABCD pullback, and then another one after making a D. This is like 1, 2. This is quite remarkable. So it's this little cluster pattern here. Where's my paper? Let me just put it here. If you don't mind, let me write it down. EEM daily pattern. Very interesting. And that's why what happens in peak D in the Dow is going to be absolutely key. Is this G in the daily? Well, I've got not a G, I've got an E/A. And you miss something. You see the tiny little there, this tiny little peak, 35.90 to 35.89 on the 20th to the 21st of July. That's A. Then it goes B, then it goes C, then it goes D real quickly. Then you have a sharp pullback. That's what you always get. Not a crash, but a big pullback after the very quick peak A, peak B, peak C, peak D. And then there's a pullback and a breakout of tremendous strength because it's gone from 35.55. This is the iShares MSCI. I believe it's the Emerging Market Index. That's the full title. So it pulls back, goes to 35.55 and 35.55 to 37.28. That's one of its biggest single moves it's had in a couple of weeks. So I have to consider that maybe this is an A and not an E. I don't know. I'm just saying. So what's the question? The question is this G in the daily ready to short? No, it's an E, but yes, ready to short. I'm getting ready to consider. I don't know if it's a short because I need to see how it closes the weekly chart on Friday. Because if it's just a pullback from 37.24 to 36.21 or 35.90, I mean, yeah, it's a short for a very quick move. Short meaning, is it a short going from 37 to 32, 34, 32, 34 or 32? No, not at this point. It could be, but at this point, I don't see it. I need it to play out correctly. Okay, so I hope that answers. Yes, Dana. Okay, yeah. You got to be. What's the objective in the Chapman Wave methodology? Count every peak. That's all your only obligation is, and you'll see everything just kind of rolls out at a certain point, you say, oh, I've got it now. I didn't get it before. Now I've got it. And it's clear. Within 2 bars, you should have clarity on what you're thinking. All right, let's go to back to our story. I said I want to look at the VIX. Look here. The VIX.X is in an area that it hasn't been very often. It's at 11.24. The low today is 11.02. When was it last in 11.02? You have to go back to that period back in July of 2014, 2 years ago. And before that, you have to go to 11.05 of 2013, March. It doesn't happen all that often. But what happens is once it gets there, it starts a series of moves that says, within the context of just normal highs and lows, you can start to expect a very choppy period. But in the beginning, it has limited downside for the market. But once it goes from the 11s to the back to the teens and into the 14s, that choppiness increases tremendously. So this is the area where I'm saying it's unusual to stay in the 1103 to the 10.50 or 1020 area for very long. And therefore, now we've got to start being a little bit more cautious. And that's exactly what we're starting to do in my opening call. We've got some nice longs. We had one long that, thank goodness, I said yesterday, it's at peak D. I want to get out. Let's take some of it off. We had a half position. We took some of it off. And then this morning, earnings came out and it dropped sharply. Thank goodness the way it dropped. If you had a stop in place, you should have been hit and you should have made money. But if you didn't, at worst, you should have gotten out with maybe a loss of 3% or something. Lucky, because it doesn't happen to us very often. Over all the years, the earnings reports, we've been in a position where we've ameliorated any real damage. And most of the time over the last few weeks, we've had some real nice spikes to the upside. So let us do this. The volatility index is going to become even more important. Remember, I spoke about the quick peak A, peak B, peak C, peak D in, thank goodness I wrote down, EEM. Well, look at the VIX index. It went from 1140, was that 1140? Yeah, 1140 on the 20th of July. And within a week and a half, on the 2nd of August, it hit 14.24, leg D. And then it came down from 1424 to 11.0 something today, 11.05 or whatever that is. That's 3 points. That's huge. That's 28%. Well, it's a big move. So start getting ready for the VIX index to become viable again. What a pity it wasn't, because it's just fun to be able to buy something like an option, because then I can say to you, hey, don't get carried away. At 0.90, which is what it would have been at this particular point, treat it like an option. Just buy it as if it's just a tiny part of insurance, and let's not even think about it. Then I could have said, you're prepared to lose a good 80% if we're absolutely wrong, but there's a good chance that you could get a double on that money. Don't get so carried away that you think you're going to retire on it. Yes, you could, but it's not really what you want to be doing, because this has to be part of an overall portfolio. Just think of that you do not want to risk and put so much money in the basket that if you go wrong, you've now really damaged years and years of building up equity. So just treat it like a very small position, maybe 3%, 2%. Just it's more like that you're practicing your craft, that you're practicing to be able to, like we buy the DOG 1-to-1 short of the Dow, or the SH 1-to-1 short of the S&P, or we go for the 2 times or the 3 times. But it's part of the package of being able to trade the upside. That's what I'm going to spend time on in my webinar next week. I'm going to be talking about strategies. Remember, for subscribers over a year ago, February of last year, I said we're going to start, for those of you who've never shorted, I want you to get used to it. We're going to use the DOG as an instrument. And we used it for a long time. We lost a little bit of money on it. It made money and then it lost money. But I wanted to keep it until we got stopped out so that you learned. A 1 point loss or 80 cents or whatever it was on something that's trading at $24 on a small portion, just to be able to practice the art. It's the most inexpensive lesson you could ever have, because you learn psychologically that you want to be in control of down markets as well as up markets. And I think we're going to have a pretty sharp down market at some point soon. It's going to be a surprise, and then things are just going to kick in. for another move to the upside. That's my thinking. We'll see if that's the practical application. Now, I just want to go back to this chart right here. Remember the Dow 120-minute chart? I was looking for a leg D to the upside. We've got that leg D to the upside. But, oh, there's that buzzer again. Thank you for reminding me that I forgot to work on it. I'll work on it somehow. There are plenty of other things I have to do. What I'm looking at here is that within the context of looking for a new all-time high, if we pull back for another hour or so, and then we start leg E or F, it's going to say maybe Wednesday we get leg D to the upside of the Dow. But then what do we have? And I'll go through it as soon as we get back. I'll go through all the indexes, key indexes in their dailies, and we'll make some decisions. I'll talk it through with you as I have for my subscribers to my opening call. I'll be back straight after this break. Dow's up 41, S&P's up 5.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
I always had a couple of questions that I think I'm going to need a little more time rather than just doing it really quickly. And one was the IYZ, which is the iShares US Telecom ETF. I think this is a peak F in the weekly chart, but only B. So far, I think it's B in the monthly. So remind me tomorrow. I'll do some work on it tonight so that I can do something a little bit more cogent. I also want to look at VZ and telephone, etc., and I can come up with it. But in the meantime, I can just say the IYZ at 33.27 needs to get above 34, and it needs to do it really soon. Close above 34 on the daily. But if it breaks under 32.50, that's not good. It's just not good. All right. And the other question was the XLU. XLU it's that monthly chart that keeps me looking at this and saying, yeah, maybe it's going to still go higher. But peak D in the weekly, peak E in the daily, yep, it's the same thing as the IYZ. It's trading at 50.80, up 9 cents. And if it breaks under 50.20, let's call it 50. Close under 50 would be very negative, and it close above 51.74. That's a point above where it is right now. We'd say, okay, just the trading range goes into the rectangle formation. I think it should go to the rectangle formation, but many of the utilities have had spectacular moves. You'd expect a little bit of a pullback here after just a fantastic rally. All right, and the next question was the TYX. Let me just do this real quickly. The TYX is saying the H pattern in the daily and the H pattern in the weekly is going to get a real big test, because as I'm looking at it now, there's a chance that that yields could start to rise, and that'll be if the TYX, which is the 30-year, and the TNX right here, which is at 15.68, if they both rally, and they rally about a point higher than they are now, that's going to be very significant, and that's when I think our market starts to take a bit of a breather. I don't want to say a diver, I just want to say a breather. Okay, so here we are. We're going to just about wrap it up. You're going to go for your swim lesson. Don't forget, you've got programming all day today, Tuesday, and don't forget you've got Andy Heck tonight, webinar. You've got tomorrow night, Steve Rhodes. I'm coming up next week. We're about education here at TFNN. Believe me, you're going to get a lot of education. My outlook is going to be what's next. Where are we within the coda? We've already started the coda formation. And that coda formation can last anywhere from being very short to very long. Could be months, 3 months, or it could even be 8 months, maybe even a year from here. But it's going to be an incredible period. We're going to see things that we've never seen before in every way. That's what I'm really saying. Okay. So now what we're looking at, yes, falling axe formation in the bonds, but I don't think bonds at this point are going to end their sojourn in the low category. I think they're going to stay around here for quite a while, even with big pop-ups. They're going to stay low, and then later on we've got to be real careful, because it could lead to inflation, and that's the worst thing. Well, deflation is terrible, but inflation can be even worse. And I don't know yet, but I don't think any politician, I certainly don't think our two presidential candidates have ever been in a supermarket. So, and that's just a tragedy. It really is. Every president should spend a day in a supermarket. So the TYX longer term, let me just show you something here. This is an incredible thing, TYX.X. Look at this. Let me show you something. This is a 31-year bear market. Look at that channel. From 1986, it's actually a 30-year, but it really goes back to September 81, where the high was made. Look at that channel. And at some point, we will break to the upside, but we're still stuck underneath the 9-period moving average. And this is the 30-year Treasury bond interest rate. Isn't that an incredible chart? I'm going to be talking about this in my webinar. I'm going to be talking about this in great detail. It's going to be very exciting. So I'm signing off. Check out my opening call, had some real nice positions, and we will see you tomorrow. And don't forget, webinars all the way. That's what we are all about, education. I'll be back tomorrow. Have a wonderful day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.